In question number 76, you can observe that the two partners A and B are having closing capital of 4 lakh and 3 lakh after adjustment of profit that is wrongly distributed and drawings. So drawings have been done, or adjustment of drawings have been done. Drawing of the two partners are 48,000. That means for A the amount of drawing is 12,000 drawn at the end of each quarter. So there are 4 quarters in a year. So 12,000 into 4 is 48,000, and for B it is 18,000 and end of each half year. So there are 2 half years in a year. 18,000 into 2 comes to 36,000. So drawings are added to arrive at opening capital. We are adding drawings. Then profits 2 lakh rupees have been distributed without any appropriation. That means 2 lakh has been distributed in the ratio 3:2. That is their profit sharing ratio. So 1,20,000 and 80,000 have been distributed to the partners. This is the opening capital. So this is the correct opening capital of the two partners. So on this opening capital only we will calculate the appropriations. What will be the appropriations now? Now interest on drawing will be calculated. So you can see partners capital account, although you can prepare it at last. Then journal entries. First, interest on capital at the rate of 5%. So if you calculate interest on capital on this amount 3,28,000 at the rate of 5% and 2,56,000 at the rate of 5%. So for 1 year you will get 16,400 for A, 12,800 for B. So since the entries have been omitted, so remember the entry for omission or rectification for omission. In case of omission we rectify the entry as just passing the entry. So profit and loss appropriation account or profit and loss adjustment account, both are the same. So PL adjustment account or appropriation account will be debited as in case of PL appropriation account, and then they will be credited by these amounts. Second omission is interest on drawing. So we can see the interest on drawing calculation how it is done. So come to the working note, you can see the calculation of interest on drawing also. Drawing of A is 48,000, and at the end of each quarter there are 4 quarters. So at the end of each quarter, that means if the year starts on April, ends on 31 March, end of first quarter would be 30th June. So after 30th June there are 9 months remaining in the year. So months remaining are 9, and the last quarter is January to March. So if the withdrawal is at the end of last quarter, no time remains after that withdrawal, that is after 31 March. So months remaining is 0. So 9 plus 0 by 2, the average period comes 4.5. Similarly, in case of B, the drawings are at the end of 2 half years. So first half year ends on 30th of September and second half year ends on 31 of March. So after 30th September we have 6 months remaining. After 31 March we don't have any time remaining, so it is 0. So for in case of B, the average period will be 6 plus 0 by 2, that is 3 months. So like this we are calculating interest on drawings at the rate of 5% for 4.5 months for A and 3 months for B. So these are the amounts: 900 interest on drawing for A and 450 interest on drawing for B. So this will be the journal entry. Now we will pass the journal entry for B. Second journal entry would be A's capital account debited, since interest on drawing are debited, and then B's capital account will be debited. So adding both the amounts, the PL appropriation account will now be credited 1350, and at last or third entry we have to see. Before the third entry you see the adjustment or calculation of third entry. How are the calculations done? Earlier the profit was distributed wrongly in the ratio of 3:2. So 2 lakh rupees wrongly distributed, 1,20,000 and 80,000. So in case of adjustment table, what we do, the amount which is wrongly distributed is debited. So this amount is debited. Then correct divisible profit. How do we arrive at correct divisible profit? You can make a profit and loss appropriation account also, and like this, in the profit and loss appropriation account you will get profit in the PL appropriation first credited, interest on drawing is credited in the PL appropriation account since it is income, and on the debit side the appropriations, that means interest on capital, it is not drawing, it is interest on capital. So interest on capital is written on the debit side of profit and loss appropriation account, and after that the divisible profit comes 1,72,150, and when you distribute this 1,72,000 in the ratio 3:2, what you will get, these amounts 1,03,290 and 68,860 to the partners, that should be credited. So correct amount are these. So in the calculations now you can see 1,03,290 credited and 68,860 credited. So after adjustment what you get, 16,710 should be debited to A add as adjustment, because earlier wrongly this amount was debited, now correctly this amount should be credited. Ultimately it is a debit amount 16,710. And for B, earlier credited 80,000, now debited this much, and then this amount correctly to be credited, the adjustment amount should be now 11,140 debit. So like this we will pass third journal entry for adjustment of profit. So A debited 16,710, B debited 11,140, and profit and loss appropriation account or adjustment account credited 27,850. So these are all about the journal entries. Now in the partners capital account, a simple thing has to be done. Opening capital has to be written on the credit side, interest on capital will be credited, then divisible profit that we had calculated will be credited to the partners. Drawings are always debited, so drawings debited, interest on drawing will be debited to the partners, and like this the closing balance of the partners are 3,98,790 and 3,01,210. You will also find that the difference between these amount, that means wrong closing capital of A was 4 lakh, now correct closing capital is 3,98,790, the difference would be 1,210. Similarly for B, wrong closing capital is 3 lakh and correct closing capital is 3,01,210. So this, here also the difference is 1,210 only. So this is the solution for question number 76.